Thanks for staying with us on SABC News. Let's take a look at your market news now. We'll start in Asia, where China and Hong Kong shares were down today as elevated geopolitical tensions dented investor sentiment. This after US lawmakers on Thursday accused TikTok of serving harmful content as they push to ban the app. Lingering concerns over the global banking crisis persisted as Hong Kong Central Bank said on Friday that the city needs to watch carefully for any further spillover from US regional banks, although it has very little exposure to the situation in Europe and US financial institutions. So the Shanghai Composite Index lost around 0.6%. The Hang Seng Index was down by 0.7%. Let's go to the United States, where Wall Street seesawed to a higher close on Thursday as market participants were reassured by US Treasury Secretary Janet Yellen's assurances that measures will be taken to keep American deposits safe. The S&P 500 was up 0.30%. The Nasdaq Composite Index gained 1.01%, and the Dow Jones Industrial Average was up 0.23%. The JSE is also trading lower, with the all-share index falling 1.7% to 74,264. Markets in Europe are also weaker at this hour. Britain's FTSE 100 has declined by 1.8%. The CAC 40 in France has lost 1.9%, and Germany's DAX has shed 2%. The rand is trading at 18 rand 26 to the dollar, 22 rand 28 to the pound sterling, and 19 rand 60 to the euro. When we take a look at commodities, gold is trading at $1,992 an ounce, platinum at $976 per ounce, and a barrel of Brent crude oil costing $73.45. Let's get some analysis on this. Sean Dendere, who's the senior sales trader at Tribe South Africa, joins me now. Thanks so much for your time on SABC News this afternoon, Sean. Let's start in the United States with that banking sector. Still quite a lot of turmoil being seen there. I've seen a lot of banking shares in the United States down. Has that reassurance helped?
All right. I think the reassurance doesn't go long enough in the sense that I think they are focusing on the smaller banks. And I have a feeling that, with the larger banks, there is fear of bank runs and the like. So it is a bit of a catch-22 that, the US Treasury Secretary stated that, they are going to protect deposits and the like. But how far are they willing to take it, and how far will it actually help the banking sector in general?
Sean, we saw that Asian markets opened down. They're still down at this hour. Is it correct to attribute that to fears of global economic growth slowing down and that continuing banking story that you've just touched on?
All right, yes. I think it is purely on global, well, not purely on global economic growth. With China, for example, basically the biggest economy in Asia, I think about a couple of weeks back, they revised their growth prospects, even though they have, reopened at large. So they are still reeling from COVID lockdowns. And then, as you stated in your segment, the Asian market does not really have a lot of exposure in the United States with regard to the banking sector. However, we are operating in a global economy, therefore there might be slight ripple effects, and the U.S. Treasury Secretary's words yesterday spooked the Chinese or the Asian markets, purely because once again they're also not sure how far they're willing to go.
Okay, we also saw data coming out that indicated that Japan's manufacturing activity had contracted for the 5th straight month in a row. This is adding to the kind of jitters that there are there about the slowdown in the global economy, right?
Correct. So looking at Japan, they have been suffering from production and output issues. And this is purely from, vehicle sales. They're big in that, looking at your likes of Toyotas and the like. And we also had the semiconductor shortage, which was due to COVID and the restrictions there. That is something that is really affecting Japan in the interim. And I do think it's going to take, a while for things to pick up. However, with the state of the global economy right now, at least the Japanese economy is seemingly in for a long ride.
Earlier on, you spoke about markets being spooked. Do these jitters extend to Europe, and what's moving their markets there?
So Europe will speak to, the normal things we've been speaking about the past couple of months, inflation. So looking at Europe, inflation is really affecting them. I'm seeing that, I think last week, the ECB announced a 50 basis points hike in interest. And we shouldn't forget that, the point of a central bank is really to control monetary policy and the flow of funds in an economy. So they are really, still fighting on the inflation front. If we look at the UK yesterday announced that, inflation actually rose, which led to them, increasing the interest rates by 25 basis points. The jitters that are coming through from the United States, I don't think will be as large as they are in the United States in Europe.
And then when it comes to local and international company news, what's standing out for you? What are you looking out for going into next week?
All right. I'm going to speak of something topical. So I'm going to speak to transaction capital purely because they are funding, SA Taxi and the like. It is an interesting, stock to watch purely because, I think last week their stock basically crashed by almost 40%, if I'm not mistaken. And they are currently in damage control. Looking at the markets, the stock price is today up at least by 2.3%. But it is an interesting stock for me, an interesting company to look at, because if we're looking at, the taxi industry, services a large number of, individuals in the country. So in terms of, transportation and the like. So it is important to keep a close eye on what's happening on that front with transaction capital and the taxi industry.
Sean Dendera, thanks so much for your time and insight this afternoon, taking a look at local and international market movers. Diabo Sitcho standing by on the other side of this with SME on point. Do stay with us here on SABC News.